Hello, fellow traders. 'Tis I, the Rumpled One. Let's talk trading. It's Sunday, March the 4th, year 2018, the weekly opening gap. How many of you guys out there are so diehard you're trading on Sundays? You come in and you get on the computer because you just can't get enough of this. As always, remember money and risk management. Very important. Always remember that. Simple. Position size equals the risk divided by the stop loss, or the stop loss equals your risk divided by position size. What is your risk? The amount of money or percent you're willing to lose on a trade to find out if you are guessing the right direction. Because that's all trading is you guess a direction. Okay, let's see. We've got the weekly candles up here, and we can see there's only one gap that hasn't filled. And that's the the dollar yen. You can see here, dollar Canadian, it gapped down and it went up and it filled that gap. Not a bad trade. Looks like it would have been about 16 pips. Simple trade once again. And you can see here we've got some nice movement off the weekly open so far. I mean, I guess some people really wanted to move. Look at these pound pairs. All except the pound dollar. That's pretty much stuck right around the open. New Zealand pairs move nicely. Looks like the Australian pairs move nicely. That's what we would think here because the beginning of the week. See, we're into the second hour right now? Or are we into the third hour? Actually, I think we're into the third hour for the week. And we can look at the daily chart. And the daily open and weekly open's the same on Sunday/Monday. However you want to call it here. In the U.S., it's still Sunday. So you can see here. Seems like it's interesting. All the pairs are pretty much to the upside. That's really interesting. And look at some of the ranges we've already established here. Was there some news I missed out on? Some nice trading ranges for 3 hours of trading. And you can see here trading the buy zone. 1 opportunity, 2 opportunities. So you see here once again, you got in, it went up, it closed that gap, it came back down. You could have gotten out, scalped some pips there. And then you could have re-entered right here. So you see this price action here. This is why we need to take those 5-10 pip profits, and you can do it repeatedly. And you can see here another analyzing. It went above this candle's high, came back down. If you got in here, just take your profit. Just go ahead, take it. What's the worst thing that can happen? You'd be able to re-enter if you really want to get back in cheaper. You know, it's just that simple. Take the profit when you can. And as you can see here, the rat zone's pretty compressed. Only got 25 pips. There's no rat trade at the moment. And looking here at the, we got the open, we've got the pivot. Wasn't much distance, but once again, you don't need much distance. You just need to take that simple trade, take the money off the table. And looking at price action, it gapped down. What more can we say? Turned around. Green candle at the line. Green candle at the line. So you would have had green candle at the line. It didn't work that time. But that's trading. Oh, speaking of which, there was a comment, something about they were asking, can I just talk about one method in a video? Well, I believe, if I'm not mistaken, if you search my YouTube channel for any of the methods. I think I've explained them all. I think there should be a couple of videos showing, say, the frequency distributions and how they were developed, and showing how to, how they trade and how to trade them. I think I've done that before. Now, if you can't find what you're looking for, feel free to ask and I can make another video. I know I need to make some videos on some new indicators I'm working on. I need to do one on the dashboard. And I'm just going to give you guys a heads up. I have some really big plans for the dashboard. I wanted to really revamp it, but I've got some other things that have nothing to do with trading, and my time might become a little precious. So what I'm probably going to do is I'm going to take the 2017 dashboard, I'm going to put it in the 2018 donationals. I'll call it the 2018 dashboard, and keep working on that, because the other one's going to take a lot of time. And basically, I'll just let you know what I'm doing. It looks like I'm already running for some offices in the union that I'm in, SEIU Local 503. So that's going to take some time. And also, depending on what happens Tuesday, I might actually be running for county commissioner for the county that I live in. Only because one of the commissioners is running unopposed, and I'm really disappointed in her. So if nobody else is going to put their hat in the ring, I'm going to put my hat in the ring. So I'm going to get a little more political. So that's why I'm probably going to have to put that dashboard, that huge revamp, kind of off to the side for a while to see what happens. And it's already March, and so, it's time for me to get out on the ranch and start planning some things too. I know none of that has to do with trading, but I just need to let you guys know what I'm up to. And you might be wondering, why isn't he doing this? Why isn't he doing that? Well, now you know. So anyway, let's keep looking here. The 5 lines from yesterday, once again, right here, green candle at the line, you go long. I show you guys this stuff, every day. Every day, that trading day, that is. It's pretty simple, I think. Here we've got the weekly close open. We've got the monthly close open. And you can see here, because it's Monday, the weekly and the daily are the same. But, just trading that monthly open cross, look at this. See, we've got hundreds of pips here. You could have done that on just one simple trade. That that monthly open, just taking that trade, trading away from the open. If you're taking an open line trade, you're always going to trade away from the open. If you're taking a reversal trade, off a high or low, you're going to be trading towards the open. Just to put that out there. And whenever you're fading a gap, you're always fading. Once again, you're trading away from the open. And I'm thinking, maybe I should put the pivot here, but I didn't want to really, no, I didn't put the pivot here because this is showing yesterday's candle. That pivot we've got on another trade, so we won't muck things up. We'll keep it simple. See, it's real easy to do that, to muck things up. And as you can see here, we've got the wick zones. Price entered the wick zone, came out, price entered the wick zone, and it's coming out again. Once again, simple trade. And we've got the holo. You see, we had the lowest open, came back, touched it, bounced up. We've got the highest open, one up, made a new high, came back down and out, coming back in. So you can see here, sometimes you just have to take those 2, 3, 4, 5 pip holo trades and be happy with them. Main reason, because if price is really wanting to go up and you're trading off of here, it might only pull back a few pips and then take off, and then you get stuck. And I'm sure you don't want to be stuck. And once again, looking at the tick chart. Oh yeah, somebody was asking me, what are all these lines on the tick chart? Well, the red line here, that is the highest bid price. Okay, that's the highest bid. And the blue line is the lowest ask. Okay. The dotted line here, if I remember correctly, let's see. I believe one of these is, that should be the open. The hourly open line. And the purple line is the midline. Okay. Now, somebody was asking really about how to trade it. It's something I think I've mentioned before. You see, this is the ask. This is the lowest ask. When the bid comes up and breaks that ask, now we've got people buying. Okay. Now this red line here, this is the highest bid. He's right here. And you see, if the ask comes down and hits and comes below that highest bid, like it just did, now we've got selling going on. At least that's how I'm calling it. And as you can see here in the indicator, it says ask below the H1 open, so long warning. You know, you want to be careful about that. So you can see here how this green line pushed down, but the ask went back up, but it's staying there. So you know, if that bid crosses, like it just did, now we're back into the buying mode. So that's how that works. That's just something that I came up with, my interpretation. No, can't really run any frequency distributions off of that because you know, we're talking about tick data here, and you really don't have that when you're running indicators at MT4. And this is a lot. This is live, so if I were to change the time frame or something, all this would go away. I believe there might be a way to capture that tick data, but I think that's just going to run up CPU cycles and take up disk space, and you know, that's not what this system's meant for anyway. This is mainly, you can do it for using it to scalp. That's one. You can use it to time your entries. So if you've got something triggering you long, then what you want to wait for is for that bid to come up and cross over the lowest ask. So you get a confirmation. So that's why what I might be on another chart looking at something. Okay, yeah, I want to go long, but then I'll say, wait a minute. Should I really go long now because the bid hasn't gone above the lowest ask? So no, I should just wait and wait and wait, and then finally when it crosses, I can take that trigger, and it might, you know, get me in a couple pips cheaper, or it might save me from you know, taking on water, as we should say. So that's what this is all about. So I hope that answers that question. If not, feel free to ask questions, and I'll try my best to answer. So anyway, fellow traders, it's Sunday. I don't want to waste too much more of your time here. Hopefully I don't waste any of your time, because I think you guys get some use out of these videos I produce. At least that's my goal. Anyway, and as always, it's not what you trade, it's how you trade it. TheRumpledOne off to drain the banks.